Welcome back to another episode of Passions by Way On. Today we're joining Harry Sharp, a 23-year-old entrepreneur that grew up here in Dubai, and despite many setbacks on his entrepreneurship journey, he has built a respectable following on social media through his passion for trading, and at 23 years old, he's his own boss. And in this video, he's gonna tell us how he got to this point and how you can get started in your trading journey as a beginner. The first chapter I wanna dive into is identifying a trading style, because early on in my journey, I was day trader, scalper, swing trader. How does someone identify their trading style?
So it's a super important thing to be able to identify what you want to be as a trader. You can't be 1 second starting to look at higher time frame and then all of a second starting to try to be a scalper. So it's mostly going to depend on your schedule. Markets are there 24/7, not 24/7, but 24 hours almost. And you need to be able to identify where you want to capitalize on that market. So for me, I prefer to be a session trader, meaning I'm looking for a move during a session, whether London or New York session. Whereas a swing trader would be looking to catch a swing of the market, trading more pairs and, looking more at the higher time frames. But even in my own trading, I do look at the higher time frames, a big part.
So what are all the different styles of trading someone can be?
So there is lower time frame scalping, which I definitely don't agree with. With what I've seen and my experience in the markets, I've rarely seen people be able to be long-term consistent on super low time frame. I think the best balance is considering all time frames and choosing a specific entry time frame and entering based on that. If you'd like to enter on a higher time frame basis, leave trades for longer, then you can enter on a higher time frame. But everything revolves around higher time frame no matter what. You're just choosing an entry time frame, session, or based on swing.
Depending on the trading style, what should a beginner trader focus on? What pair, what market?
So when it comes to choosing a pair, it's going to drastically demand on if you're going to be a swing trader or an intraday trader. If you're going to be a swing trader, you need to have more pairs because you need to try capitalize off swings of the market. Now, also come into consideration, where do you live? If you're someone who's maybe in US, you'll have to maybe focus more on a futures market due to regulations. For me, I like to diversify my pairs. I'll trade 3 pairs. I don't recommend people who are trading intraday to have more than 3 pairs. That's max. That's after 5 years. So I have 3 pairs, 1 commodity, 1 FX pair, and 1 indice. And that's how I like to do it. And basically, when you're trading with people in this industry, when you're getting to learn how to trade, you need to trade the pairs that other people who trade so you can compare your analysis. Super important to have a community. It's like a team. You trade like a team.
I've interviewed a ton of traders.
Yeah.
And I can tell when there's someone's fake, when someone's real. I can tell when someone's built an authentic community, when someone does fake engagement. You're in the trading scene. Has there been any major setbacks on your
For sure. I mean, the reason why it's fake is because of the expectations that are set. Super high expectations are set, which kind of leads into expectations that are not realistic, and people fake to meet that expectation. So they're faking stuff to meet that expectation. Now, for me, on my side, I had to come with realistic expectations. Now, not everyone wants to watch realistic expectations because it's reality. And the reality that maybe that first got them hooked turns out not to be the case. So most people actually end up quitting before they actually realize the realistic expectations. And that's just how it is, man.
So now, Harry, I want to dive into trading plans. I've had the habit of doing many different trading plans, but how do you find the right trading plan to keep consistency?
Trading plans are actually the most important part of the game. And you have to realize that this is like everything, like we were just wake surfing. That's why we chose that, because we had to have a plan in order to stay in that wake. Eventually, we threw the rope in, and we found that pocket from different form and cues that we're given. That's the same thing a trading plan will do for you. Now, a trading plan has to be proven from statistics and probabilities. What I mean is there has to be probabilities and statistics. Can't be anything random. So the first part of the plan is, what time are you going to trade, right? What session? London, New York, Asian, and set a window. Normally a window, if you're a session trader, should be around 3 hours, 1 4-hour candle, right? Second part of your plan is, what is your routine on the charts? Markup, making sure to check bias, all of that stuff. We will get into a strategy part in the next part, but this is the second part of the plan. Third part of the plan is, what is your entry requirements, right? What are you looking for? All of this has to be set. and test it. What do I mean by test it? You have to have proven results. So either you find someone who can show you that proven results and prove to you that these results are valid through years of testing, thousands of iterations. And I always recommend, because of how this industry is, you should go ahead and jump onto a simulator, jump onto a backtesting software and go and test those, and to make sure that they work. And if you're experimenting with a new strategy, a new entry type, you need to have your trading plan, and you need to set what is the entry types and what is the confirmations you need, which we will cover for my style, but I'm saying this for any beginner that wants to learn to trade. You need to have them proven on a backtesting software, look at previous data, go back over again, week to week, month to month, skipping candles, taking those conditions and seeing the results. And then you solve for X. X is going to be basically your variables in your trading. What candles close, those variables is how you're going to be able to prove to yourself and follow something that's consistent and that you can repeat. Without those variables, it's impossible, because if a variable fails, you can't solve that variable. It's a randomness, because a plan, a strategy protects you from randomness in the market, right? So it's extremely important on having those variables and solving for those variables.
How long should I be testing on like a demo account? I shouldn't go straight into a live, right? I'm testing a new plan that I found on YouTube or learn. Is that, buddy?
Already a mistake to go on demo. It's a waste of time, because it's just going to take a lot of time to be able to, and you're going to want to do good. Immediately you should go into a backtesting software. You can use TradingView Replay as a basic one, or you can get a software like Pip Labs, something more advanced where you can actually skip candles and play the candles, and you should just go test there. You could finish over a week of data in a matter of an hour. So instead of saying a week on demo account, that's just a waste of time. The same information you could get from a week on demo account, you can get in an hour on a backtesting session. Way better, Log that at least, I would say 50 trades to even establish that it's somewhat working, and see the stats, win rate, profitability, average win, average loss, all of those stats,
Ask this a lot to traders that I've interviewed. For you as a beginner trader, someone wanting to test out a new strategy, how much capital should you be testing with?
So capital is only for your mental side of trading, for basically trying to trade in forward testing results, seeing how you handle emotion. So this is how much can you afford. You don't need much money. It's the skill that's going to pay you, not the money. Money can be, you can just add that later. It takes a click of a button to start risking more. The key is just enough to feel a little emotion. I really recommend that you just go as minimal as possible, because you're most likely going to lose money, and it's just building that habit. You want to soon get attached to the actual trades than attached to the money, so that you feel upset losing a trade, not losing the money, so that you focus on the process.
Let's just say I found my strategy. I understand how to collect data and backtest it. How do I know which arcs to improve or refine on my strategy?
Something that many people don't understand in this industry is that in every single trade you take, everything you do, there's going to be something that can go wrong. And people try to solve that thing that can go wrong. And what ends up happening is just you're in this endless cycle, and you just lose because you're trying to solve variables that are not there to be solved. Your job is to have an edge, not to solve the market. You will never solve the market. It's not possible to do that. So there's a very fine line of trying to review, react to what you've reviewed, and then repeat that in the market. The biggest issue is that many people don't know what to refine properly. So once you see the outcome of your trade, you go and dissect, okay, what caused it to fail? If that's something that's going to occur often in the market, then it's just something you can't avoid. Your data should say that, hey, 75% this same setup works. I don't need to control that variable. Best thing is also to get feedback from someone who can tell you no, or have the strategy proved to you, because you have the info on that strategy. You have the data. You have to trust the data. You can't keep trying to solve. Now, most things you will be solving is like, I missed this. This was something that was in my plan. I didn't execute on. I didn't do this properly. And this is where most beginners fail, is that they keep trying to change what they do, and they don't trust the process to see, I need more information. You can't make an analysis from one trade, but guess what? You lose one position, you feel so bad. You're like, I need to do something different. I'm totally wrong. One trade doesn't matter. It's such a small data set. You need loads of data. So refining is very fine, because you'll just spend your whole career refining and losing, instead of just accepting that things can go wrong in a trade, and you'll never find that perfect trade. They don't understand that, this is how you fail, is because you are just trying to force things that are not there. So it has to be super specific, super accurate. Win rate will go up 70% easy.
What is a realistic return, let's just say, per month?
I think this is going to be dependent on the month, of course, but if you're profitable that month, you're doing well. Now, I would say on average, I think if you can aim for 2% return risking 1%, so or a 2R return is very realistic. I think that's where most traders should be aiming, and that's definitely where I changed my mindset to start aiming for that. But I average around 5% a month. That's kind of like, not 5%, 5R is what we call it, return on what I risk. You can have big months, man. That's part of being a trader. It's like 1 month can be only 2%, 2R. Next month you could have 20R, like a banger month, you know, and then that pays for the next 2 months because you've just had 20R month, you know. And that's what you have to understand. It's not a month-to-month thing. It's kind of like you need a whole year to see where you're at, you know. I avoid going into a negative month because what I'm able to do is I'm able to choose wisely on trades when I feel like the market conditions. Experience brings me being able to be an observer in the market. When I'm an observer, I know when to take action and when not. It was a hard lesson, but I learned how to sit out of the market, let things that look good pass, and just get into things that have a higher probability. Even if I'm going to return my month, let's say a lot less than I was expecting, it stops me from going negative by taking silly positions, you know.
So hey, I think you did a good job at helping us navigate to find what type of trader we are, and of course, finding a plan and sticking to it. Now I'd like for you to get more technical and share your plan and how your strategy is.
I break it down into something called the 4-step method. I like to have 4 steps when I trade, which is going to be marking up my charts, finding a directional bias, finding my zones to trade in, executing on the trades. So I have gold here because we were having gold in coffee and whatnot. Gold is actually at an all-time high. So it's going to be relatively easy to do a markup. We're only going to lead probably 2 or 3 lines. So I want to mark something a little bit more complex. Just get an idea of marking up something that's maybe a little bit more hectic. So we're going to go to GJ. You can see we're a bit in a consolidation here. What we're going to start by doing is actually start as high as the monthly time frame. If it's a fresh chart you've never marked before, you should mark the monthly time frame. We're going to go through and we're going to mark our support and resistances. So you're going to start off by marking monthly resistance. I like to name these lines. So I like to go text here, select this, MR, right? And for monthly support, we don't have a support yet because this monthly candle has not closed yet. So next thing we're going to mark here is we're going to go down to the weekly time frame. This is called top-down analysis, super important. You see how these weekly candles are crossing through the monthly? You could be trading to that weekly zone thinking that you have room, and then we reject the monthly and you lose your trade. You're like, what? Monthly was there in the whole time. So this is the weekly resistance. We crossed above this previous weekly, so we're going to mark this as weekly resistance right here. Going to double tap, put WR for weekly resistance. We're going to clone this line here. We're going to bring one more weekly resistance down here as well, as that is also one more spot. So I don't need to mark anything too far away like this resistance up here. I want to keep as little lines as possible. Reason I'm marking this is we've crossed it once. In technicals, sometimes you can get a situation where we cross a resistance, we can come back to it like this. So in that case, I like to mark the previous, which would be equivalent of that. So quite an important step. Now we just go down to daily. There should be less and less and less lines. Reason I chose GJ is you can see we're very in a zone with a lot of mess on the charts. So it's good to mark up and practice this. So on daily, you can see there's a lot of mess here. So nice ways, we're going to just mark, always look left, and you're marking your most recent resistance. Now, a common question beginners are going to ask is how to define a support and resistance. People just saw me marking resistances. So how do I define that? It looks easy the way I've just done it. And I wanted to show people how I've marked the resistances, but a resistance is defined by having a bullish candle, right? That's my drawing of a bullish candle, followed by a bearish candle close, right? That bearish candle close is going to form a resistance, right? And the resistance is marked on the candle bodies, not the wicks. You can see this is marked on candle bodies, not wicks. That's how we mark the resistance. Now a support would be the opposite. Support would be a bearish candle close followed by a bullish candle close. Then we have a support form. Only one candle makes it a support. A candle that is open does not count as a support or resistance. Very important. So this is your support and resistance, right? And you need to mark down all the way down until my entry time frame, which is a 15 minutes. So I'm going to continue to mark this.
And the time frame what's the highest time frame you're starting at?
I start monthly.
Monthly?
That's the highest. And you only need to do it once a month. Weekly, you only need to mark once a week. So we go down. This is now our daily resistance. So I'm just going to put one line. And, to be honest, you don't really need, you don't even need this weekly up here, this monthly up here, because price is so far away from it. You don't even need to worry about it. You don't even need this line here because price is, again, so far away from it. So we can just keep our trade charts clean. Next one, you go to 4 hour. This is probably the most important, 4 hour and daily. That's the time frame you're going to be adjusting every single day. We can see a little bit lower. We have a 4 hour resistance. It's a tough range here. We can see we have a lot of resistances above. That's going to be your next major resistance here. So we're going to mark that as 4 hour resistance. This weekly resistance is also 4 hour support. You can see how it rejected from that level. You can also see how the 4 hour rejected from the daily. That's why these zones are, because you can see this line and this line, both I didn't draw on the 4 hour and we're reacting to it pin spot. If you were to go into something like a 15-minute, you look how accurate that daily resistance became. And there's nothing there. Like, many people would be like, what? Look, it's clean, right? There's nothing there, but look at how accurate this zone became. So you need to know, because if I'm looking for buys today and I trade into the zone and then you're losing all your buys, everyone trying to take buys here, all lost. Why? We knew this because we marked from the daily. Super important to understand that. Otherwise you lose trades super quick. So that is very important, how to do your markup from those time frames. 4 hours the same. Now we don't need to mark a 4 hour support. Why? This is a 4 hour support here, but it's already marked for us with the weekly. So we can just leave it. If you want to be clinical, you can write /4S just to show yourself it's a 4 hour support. Go down 1 hour, just finish this process. And you can see, once we do the higher time frame, as we're going down, 1 hour is clean. Our next 1 hour resistance is only here. These lower time frame ones, I'm going to speed through a little bit just so we can save time on this. 30-minute, same. 15-minute, also same, right? Now 15-minute, we have just one more extra here, which is going to be this one here. And that is your chart markup done. You have your zones now, you know where your barriers are, you have a path. This is letting you a map. Now we can move to the next step.
And what is this strategy called?
This is just price action. So this is what people call support and resistance, but I don't trade support and resistance, meaning that when price reaches resistance, I sell. When price reaches support, I buy. I just use that to find zones where price can react from. I obviously don't want to trade where price can react from, because if I'm trying to look for a buy and I'm buying into a wall, I don't want to buy into a wall. I want to buy into a free highway. I want to buy where price can run. So the only way I can find that is by using horizontal lines. These are called horizontals. Compared to something like a trend line can be argued, right? Because I could argue that from this wick to this here is the start of a trend line. And someone else could argue, no, it's actually a little bit closer and we've actually broken the trend line now. So different strategies are going to call, some people say 15-minute, some people say 3 touches of the trend line. This can be argued, but what you can't argue is that right here at this point on the chart, right? And that's not to say that you can't use trend lines and stuff like that, but that's the reason I use horizontals, is because for a fact, when I started trading, I didn't want to have confusion in my trading. Did I draw my lines wrong? And you can still get horizontals wrong. You can draw them definitely very wrong, but at least that is clear that there's a resistance there and I can't argue that. But maybe I drew the wrong resistance, part of the learning process, which I'm trying to show you guys, right? And it takes practice as well. Marking accurately, making sure you're not marking too many previous levels. Remember, you're marking only the level to the left, right? It's being crossed through twice doesn't count.
You're not going to react when it's close to a wall. So basically, when you enter a trade, you're never going to enter a trade when it's near one of these support and resistance.
Yeah, exactly. So if I'm looking for sells, if it's near to my line, like it's an easy way to put it, is if it's next to my line, it's no entry. I'm mostly looking for entries above my lines or to my lines.
How long did it take you to discover this strategy that you're doing? Did you go through a couple strategies before?
Yeah, for sure. Trading like the banks, trading with the banks, you know.
Yeah.
All sorts of stuff I tried. Supply and demand, trend lines, smart money concepts, you name it. This has worked the best in terms of markup, and this is really useful.
So Harry, talking about mental barriers to achieve profitability, What do you think is the biggest mental barrier that traders face?
I think it's actually themselves. The expectations we set on ourselves is the reason we fail. I like to use this analogy. Imagine you came into this game not knowing what to expect. No one set expectation how much you should make. No one expect how well you should do. And it's only you versus you. You're going out there to discover and try your best. And your job is going to be to do your best, right? So you're going to try everything possible to do your best. And whatever you come out at the end of the day is going to be your results. So that's exactly how you want to run it. Is you want to do your best, and whatever results come out of that, that is how you're going to proceed with it. So that is the biggest barrier, is setting that expectations. When you don't reach the expectations, you fail because you're trying to find different ways to reach the expectations you set, ultimately causing you to fail. Your goal is just to start to make something. Even if you make nothing, just break even and then scale from there. You can't grow something without scaling.
Trading psychology is talked about a lot in the trading space. You think it's something people should have a focus on for studying?
I think trading psychology can be overhyped. A lot of people try to focus too much on psychology, but don't realize that actions on the chart cause emotions, and those emotions cause you to fail. So learning to stay away when something makes you emotional, take yourself away from that situation. If there's a situation on a chart that causes you to be emotional, take yourself away from that situation, and then you'll be able to not need to work so much on psychology. But it's definitely a massive part, no doubt about it, but sometimes maybe a bit overhyped.
Another thing that at least I struggled with was the fear of losing capital. What's your perspective to being able to beat the fear of, losing your capital? For example, hitting your stop loss and all that stuff.
You can't be scared of hitting stop loss. Scared money don't make no money. If you follow a plan that's proven, you're following a process, you learn to love the process, and you're not scared to lose capital. The problem is people don't have a process, they don't have risk management, they just lose unnecessary amount. If you're trading twice per day, you're not gonna go blow your account. If you're risking 1% per trade, you're not gonna blow your account. So it's super important, and it's a big step.
You've done pretty well for yourself in your 20s. What do you think is a key factor that separated you from other 20-year-olds with the accomplishments that you have achieved?
I think sacrifice. I sacrificed from an early age, gave up a lot of things that people want to do in pursuit of my dream, in pursuit of my goals. And I think it's as simple as that. You have discipline, but sacrifice is a big part as well. So taking that sacrifice is as simple as that. People overcomplicate it, give you a long motivation story, but simple as that, sacrifice if you want to reach your goals, and that's it.
And can you go into more of what you sacrificed?
We sacrifice, hanging out. You can have balance in life, you can do different things, but you kind of sacrifice, when people say, let's go out, let's do something different, let's go out to here, you're saying, no, I have work to do, You're prioritizing your time to do other things, so you sacrifice your time for something else.
What are you kind of focusing on now? Because it's not just trading, and where do you want to go in the next 5 years when it comes to trading?
I think what I'm focusing on now is my backtesting software company, Pip Labs. Great passion of mine, and I think can help a lot of people because it's literally asking them to prove that their strategy works and practicing in the markets, which I encourage more. 5 years, I don't like to plan because you either set a barrier or you set unrealistic expectations. I push 100% every day. If you say in 5 years, I want to reach here, and then you're reaching there in 5 years, it might be way less than you could have reached because I might be able to reach there in a year. So instead of doing that, what I do is I say, I'm going to do my best every single day, and let's see where we're at in 5 years.
So I guess when it's all said and done, what do you want people to remember Harry Sharp for?
I want people to remember me for me, and I want them to remember me as a kid who made their mother and father proud, and that's the maximum I could give back for all they gave for me, and that's it.
Simple as that. Well, Harry, thank you for your time.
Thank you.
I hope to collaborate with you future episodes, and any, final claims to the audience?
That's it, man. Shout out to everyone. Shout out to everyone supporting, and let's get it, man. Always up for everyone. I want to see everyone succeed who watches this. Let's get it, man.
All right, guys, if you enjoyed this episode, be sure to hit that like and subscribe button. Every single week, we're exploring the ways to test and beyond, and you could be a part of that journey. See you next time.